Welcome back, everyone, to Candlestick College. And we are in week 5 now, okay? So the last week, and this is day 1 here. So we're just going to look at the course overview and see where we are. So we're in the candle apps, the applications of the candlesticks. So today we're going to talk all about Forex, and some of you might not even have heard this term before, and that's okay because I'm going to describe it right now. So Forex just means foreign currencies trading, and that's what that means. So if you hear that, now you know that Forex is currencies. And we're going to focus on that today. And here is what you need to know about the currencies, okay? So you need to know that currencies trading is pairs trading. And also there's 8 main currencies that are very liquid. And I'm going to tell you where to find the information, what influences the prices, and then just some common terms that foreign currencies traders use, okay? So hopefully you're excited to get into this today. And so why is it pairs trading? What am I talking about, right? What is pairs trading? So pairs trading involves 2 underlying securities, and trading currencies always involves 2 underlying currencies because you have your money in a certain currency. It's in a certain currency, the currency of your country most likely. For example, if you were in America, your account would be in US dollars, and that would be your base currency, right? And if you thought that the euro was going to appreciate at a greater rate than the US dollar, you could buy the Euro USD pair, right? And if you bought the Euro USD pair and the euro appreciated more than the dollar, then your position would appreciate that amount as well. So it's important to understand that all currencies trading, there is at least 2 currencies involved, because you have your currency, what your base account is, and then the currency you're looking to invest in or bet against, and that would be shorting, okay? So this is just an example, the Euro USD pair. So if you wanted to capture those gains and sell your Euro USD pair, in essence, you'd just be buying the US dollar, right? You're not really selling the euro as much as you're buying back the US dollars, okay? It's a little tricky and hard to understand, but I'm gonna get into it a little bit more right now. So, I think I might have done the slide. Okay, so the 8 main currencies that we have in the market today, and this is just based on FinViz, and these are the most liquid currencies that is known for sure. So there's the euro, there's the US dollar, there's the Swiss franc, the British pound, the Australian dollar, the New Zealand dollar, Japanese yen, and the Canadian dollar. And those are the 8 main currencies that are traded. And so where can I find this information, right? Where can I easily pull up and see all the relationships between these currencies? And you can do it on FinViz, okay? So if you go to FinViz's main page, there is a tab there called Forex. And if you click on that tab, you're going to see these quotes right here. And you can see the Euro USD, the pound dollar, the pound US dollar, the US dollar to the Japanese yen, okay? And you can see all the relationships between the currencies. And this is what drives most of the global markets here, is the relationship between all of these currencies. So some of the price influencers for these currencies, and they're definitely affected by inflation rates and national interest rate announcements, okay? So if the Bank of Japan says they're cutting rates 0.25%, right? They have negative yield on their savings accounts, right? So anybody in Japan that's holding Japanese yen in their Japanese accounts, they actually have to pay money to keep money in there, right? Because it's negative rates and they're actually being penalized for keeping their money in cash. And next price influencer is government debt, right? If there's a concern that that government doesn't have a as bright of a future as some of the other countries' currencies, then that could really affect their currency price. And we've seen that with Brexit and the pound. We've seen some weakness in the pound for sure. Political elections can influence the currencies, and also trade agreements. And this isn't all-inclusive. There are plenty of things that can affect the currency's prices. These are just the main ones, okay? Just giving you a brief overview. And I get into currencies trading way more in my next trading course, but this is just what you need to know as an overview. Some of the terms you'll hear are pips, and this is a 100th of a percentage point. So 100 pip move would be 0.1%, okay? And another term, it's not on the slide, but another term that you might hear a lot in currencies trading is the risk-off currency. And that's just the currency that seems to be doing the best. And it's called the risk-off because if you have a huge amount of money, let's say billions of dollars, then these fluctuations in currency could mean a lot of money for you. And so you want to shift into the risk-off currency to save as much of that cash as possible. And those are the trading terms. And that brings us to homework 21. And you just are going to be scouring the currencies right on FinViz. You're going to click on FinViz and go to that Forex tab. And you're going to look at all the charts. There's not too many. But you're going to want to scour all the charts and try and find an uptrend, okay? And remember, an uptrend is higher highs and higher lows. So that's what you're going to look for in the market. And I was able to easily see that the euro against the pound seems to be in an uptrend. And that could be for many reasons, but at this point, we're just trying to find the uptrend, okay? So look for the uptrends in the currencies markets, and I wish you the best in finding that, and I will see everyone in the next video. See you then.